Now to a Fox 5 News alert, and this one hits everybody hard. We're talking about the stocks slump, and if you looked at your 401k, you know what I'm saying. I have a friend who said their 401k was down 13% from last year, and I think a lot of people might be seeing the same thing. It's a lot of the retirement savings, right, that you've worked so hard to accumulate. So what do you do now? Local financial professional Chase Lopez from ILG Financial joins us with more on how we can protect our money. Chase, good to see you. I'm looking over my shoulder here, and I'm seeing green early this morning on the markets. That might change by the time we're done talking, but just seeing green puts me in at least a little better mood this morning. How are you?
Good. Thanks for having me.
Yeah, absolutely. It's tough. Anytime that you have a slump like this and you get almost obsessed in looking at that 401k balance because you're thinking, I put so much into it. I never really looked at it every day when it was going up, but now that it's going down, I can't stop looking.
Yeah, really, when we're talking about investing, right, a lot of decisions, unfortunately, are made on emotions, right? So to your point, whenever the market is going up, like we saw last year for 2021, really everyone saw their accounts go up. We largely didn't see or didn't hear about it, right? But now that we have seen this sort of correction going on in the markets, there's a lot of angst out there with investors.
Yeah, I'll just point out that our green arrow just turned red as you were answering that question. So that's just the way it is these days on Wall Street as far as the Dow is concerned. So what do we do, I guess, mentally, before we get into what we can do financially, to deal with that 401k balance or any of our investments when you get to a time like this where, you know, it's not just one or two bad days, but now we're talking a couple of bad weeks, maybe a couple of bad months?
Yeah, to your point, the S&P 500, which a lot of people use as the barometer for the market, year to date, so up until close of business yesterday, was down about 16.5%. So really, when folks are making these types of decisions or looking at their accounts, we have to consider, what is our time horizon, right? Are you planning on using this money 10, 15, 20 years down the line? Or is retirement imminent, right? Are you retiring in the next 5 to 7 years? Are you in retirement? Based on what your time horizon is, that's kind of how you should approach this question. So for younger folks who have a longer time horizon, right? The idea is keep your head down, continue to contribute to your 401k and your IRA, and then 10, 15 years down the line, you'll thank yourself when you get closer to retirement. But for folks that are in or near retirement, really, these past couple months have really been a gut check, right? Yeah. Our investments have been largely on autopilot for a lot of folks for the past 5 to 10 years, just because the markets have been going up. So as you approach retirement, we really encourage folks to get with a financial professional, see exactly what your risk profile is within your portfolio, and then you can make decisions as to how you want to invest.
Absolutely, the gut punch for those looking to retire now. But I will say this: when we look at the bigger picture, and I think you explained it very well for the younger investors, it is a concern, but not necessarily a huge worry because you're in it for the long term. Aside from those who may have been looking to retire this year, or perhaps needed the money now for a major purchase, should we be worried about what's happening right now?
I think not. Largely, the markets work similar to a pendulum, right? The higher the up, the more violent the down. Last year, we saw the markets go through the roof for a variety of reasons, right? And what we're seeing here in the first 5 to 6 months of this year is that pendulum just swinging back, right? So if you have that long time horizon, just continue contributing, keep your head down, and it'll be fruitful for you once you get closer to retire.
So let's end on that with a little positivity for those who are not looking to retire this year, and obviously we wish them the best if they are. If you're in it for another 5, 10, 20, 30 years, whatever it is, what move would you make right now to say, I'm going to buy the dip? I'm going to put money in now, whether it's bumping up my 401k to the max or whatever I can do. What would you do now to make sure that when, and it will be a when, the markets come back up, you're in a better place than you are now?
Yeah, I would say continue your contributions if you're able to with your budget. If you're able to increase contributions, we would recommend that as well. And to your point, Steve, really the idea behind any investment, right, whether it be stocks, whether it be your home, is to buy low and sell high, right? So right now, we're in some turbulent times where the market is down. So there are some opportunities there for investors to pick up assets that are less less valuable today than maybe they were 6 months ago.
Yeah, that's good advice if you have it. And a good lesson for those, maybe keep a little bit on the side for whenever this happens again, whether it be another couple of months or years, so that you can take advantage of it and buy into secrets of the people who do have the money out there. Chase, thanks so much for joining us. It's good to talk to you this morning.
Thank you for having me.
It's 9